Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing the importance of an exit strategy in real estate. So most real estate investing content is based on buying properties. However, one important and often overlooked element within real estate investing, or investing in general, is the exit strategy. And the exit strategy is a plan for how you will eventually sell a property you're looking to purchase. And exit strategies enable you to maximize your profits when you ultimately sell, and they become even more critical when you start including passive investors in your deal, as this is one of the first questions they're going to ask before investing. The exit strategy primarily focuses on repaying the investor's money. Typically, this involves selling the property, although not in every instance. So let's break down a few of the most popular exit strategies for investing in rental properties. Number one is buy and long-term hold. And this is a traditional investment strategy where an investor buys and holds a property for 10 years or more. And during the whole time, they pay down the mortgage while the property appreciates from regular market forces in sound property management. And this is one of the least risky real estate investment strategies, but it also ties up the investor's money for many years. Number two is the value add. Now, the value add strategy is a popular real estate investing approach where investors identify an undervalued property and then spend the next 3 to 5 years addressing management issues, making necessary repairs and upgrades, and then raising rents to market rates, ultimately selling the property. Number three is the refinance. And this strategy is a hybrid of buy and hold and value add with a slight twist, and it's probably my favorite. An investor purchases an undervalued property and performs a value add business plan. Instead of selling, they refinance, extract most or all of their original capital, and hold the property long term. They now have a cash flowing property, and their initial capital is available for their next property investment. This is not a cut and dry exit strategy, but allows investors to recoup their capital if they make the correct purchase, and then it transitions into a buy and hold exit strategy. Number four is the 1031 exchange. And this exit strategy enables the investor to sell their property or properties without incurring capital gains. It is really the ultimate exit strategy, as it forces you to buy more property while shielding your gain from your first property. Now, this is an excellent strategy for investors trading up from smaller to larger properties, and many rules must be followed for a 1031 exchange. But if you want to learn more about 1031 exchanges, you can refer to GI 157 and GI 173 episodes, where I interview some 1031 exchange professionals. Number five is bringing on another investor. And this strategy is not really popular, but it can be extremely rewarding if it's done correctly. So a couple of partners of mine did this with a property in Oklahoma years back, where they identified a large apartment complex comprising approximately of like 150 units that was owned by a single person. And the property had under market rents and had deferred maintenance, but it also had no mortgage since the owner had owned it for many years. So instead of buying the property outright, they suggested buying it with 100% seller financing, making the current owner the sole limited partner in the deal, and handling all the renovations and addressing the management issues. When it sold, everyone made out better than they would have if it was an outright sale. So the current owner is not required to perform any work or pay taxes when it initially sells. And as the transaction is 100% owner financed, okay? Now, he also doesn't need to invest any more money. The new owners bring their own capital and make all necessary corrections over a 3-year period, eliminating the need to go through the traditional mortgage financing process, which also saves money. And when it sells, the previous owner now, as a passive investor, reaps a substantial share of the upside, while the new owners receive their capital back and the significant portion of the profits that they help generate. So it's a true win-win for an owner that wants to maximize the return and doesn't mind waiting a few years, and for a group that wants to come in and split some of that upside with the previous owner, while also not having to bring as much money to the table and not having to bring any other passive investors because it was just their money to do it. Now, two examples of exit strategies from my previous real estate investment deals kind of come to mind during this, is including 2 properties we purchased in 2019 and then we sold in early to mid 2022. So after speaking with brokers, we noticed by the end of 2021 that we had exceeded our target returns if we were to sell these properties. So we listed the properties for sale, and the better property sold faster, while the other property took several months to sell. Meanwhile, some passive investors in the deal, they wanted us to hold the properties and they didn't want to sell. They wanted to see if there was going to be any more money in the market that they could sell the properties for in the future. We ultimately decided to sell instead of holding out for a possibly higher price, as most people were unaware of what the end of 22 had in store for the real estate market with the interest rates that went up. Now, having a hold time of 5 to 7 years while also setting the target returns made the decision that that much easier because we'd already had exceeded our target returns. Other investors without a clear business plan and exit strategy might have just held out and see if they could get a better price, thinking that real estate always goes up. But once you really hit those targets in your plan, you know that you can sell it because that was what the plan was from the beginning. Now, as a side note, your plan, timeline, exit strategy may change during the hold time due to factors beyond your control. Having a debt term longer than your hold term and maintaining a solid reserve fund can help mitigate most of these issues. Perhaps if you plan to own for 5 years, you should consider a 10-year term loan from your bank to protect yourself from potential problems, refinancing if you find yourself in a recession within the next 5 years. So as a real estate investor, selecting your exit strategy is one of the most crucial factors to consider when purchasing a property. It also is important to note that you do not need to choose the same exit strategy for every property you invest in. However, having a detailed plan and timeline for how and when you believe you will sell property will significantly increase your chances of success. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
If you always want to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
This episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.